Hello, my dear students. I hope you guys are all preparing well for the examination, CA into Auditing examination. So here I am bringing before you one more valuable resource which you must refer before you go for the examination. So if you guys are all aware, in the recent times from the Audit of Banks chapter, they are asking MCQs. They're asking MCQs from the Audit of Banks chapter, and they're asking these MCQs from a few concepts which generally students will ignore, like asset classification, NPA norms, or provisioning requirements, special NPA norms, drawing power calculation. So like that, there are few dry topics which students are generally ignoring, and from that concepts they are asking MCQs. So what I have done is from the Audit of Banks chapter, I have put together all that content from where there is a chance of asking an MCQ in the examination. Okay, so that is what we are going to cover in this video. Will not take much of a time, hardly will spend somewhere around 10 to 15 minutes. And in case if a question gets tested from the Audit of Banks in the MCQ part, you will definitely have a lot of advantage. So that has been the whole intention. So hardly I will take 10 to 15 minutes of your time, and I will try to cover the content which is very important for MCQs part from the Audit of Banks chapter. Okay, so having said that, let me proceed further. See, this PDF I have already uploaded on the website. So just go to the website, you will be able to find this Audit of Banks MCQ topics. With that title, I have uploaded already a PDF file. You can go and kindly refer to that. So having said that, let me first start with the first concept, which is what are the various types of advances which are given by the bank. So whatever advances which are given by the bank, that we can broadly categorize them into two categories. One is funded loans and the other one is non-funded facilities. So whatever facilities which the bank is offering, that we can broadly classify them into two categories. One is funded loans, other one is non-funded loans. So funded loans are those kind of advances where there is an actual transfer of funds from the banks. Like most common types of loans which we generally see, like term loans, cash credit, overdraft, demand loans, bills purchased. So like that, there are various examples here. Here, these examples are very important. You have to remember these examples. So these are the examples of the funded loans, like term loans, cash credits, overdrafts, demand loans, bills discounted and purchased, participation on risk sharing basis, interest bearing staff advances. So these are all the kind of facilities which banks will offer, where the bank will give you the funds. So that will fall under funded loans. Whereas banks also will provide certain kind of facilities which does not involve any actual transfer of the funds. Like here, if I tell you a few examples, so non-funded facilities are those which do not involve such a transfer. Examples of the non-funded advances are letters of credit, bank guarantees. Very important, guys. From these examples, they have tested MCQs. So this could be one important area where MCQs could be tested. Here, most important is remembrance of this advance. Remembrance of the examples. Then next important area from where MCQ could be tested, what are the different modes of creation of security. So as we all are aware, whenever you go to the bank and ask them for a loan, the bank will give you loan only after you have provided them some security. Different kind of assets can be given as security, like immobile properties can be given as securities, mobile properties can be given as security, stock can be given as security, current assets can be given as security. So different kinds of securities can be offered. So what are the various modes of creation of security? This is also one such area from where MCQs are getting tested. So there are different modes of creation of security. If you see here, first one is mortgage. So generally we invoke this kind of security in case of immobile properties. So when you are offering to the bank an immobile property like land, buildings, when these kind of immobile properties are offered as security for the purpose of the loan, that we call it as mortgage. And these mortgages will be of two categories. One is registered mortgage, other one is equitable mortgage. What happens in the registered mortgage is a mortgage deed will be executed. Both the borrower and lender, that is bank and the borrower, both will enter into one deed called mortgage deed. Whereas we have other kind of mortgage which we call it as equitable mortgage. Here there will be no execution of the agreement. Here simply what will happen is whatever title deeds are there, they will be given to the banker. Banker will retain that title deeds until the loan is repaid, and once the loan has been repaid, they will give back those documents to you. So this is what regarding mortgage. Then we have pledge and hypothecation. These two modes of creation of security are relating to the movable assets. So whenever you are offering to the bank movable assets as a security, it could either take up the form of pledge or it could take up the form of hypothecation. See, what happens in the pledge is possession of the goods will be with the lending bank. So whatever goods are there, that possession you will give it to the banker. See, legal ownership will be there with the borrower only. Legal ownership will rest with the borrower. But simply what you will transfer is you will transfer the possession. Like a best example for that is a jewelry loan. So if you take the jewelry loan, which is a movable good, you go and give the possession of that jewelry to the banker. You are the owner, but till the time you repay the loan, that gold jewelry will remain in the possession of the banker. So that we call it as pledge. Then we have one more mode of security with relating to mobile assets, which is hypothecation. In the case of hypothecation, neither ownership nor possession, nothing will be transferred to the bank. Like for example, vehicle loans. In the case of vehicle loans, the vehicle will be with you, possession will be with you, you will only be the owner. Same with the working capital loans where you give stock as a security. So possession also will be there with you, you will only be the owner. If you don't repay the loan, then the banker will come and fetch that property. So that we call it as hypothecation. Then we have assignment. Whenever actionable claims are offered as a security, you are assigning the right in respect of actionable claim to the lender. Like you are assigning debtors, you are assigning insurance policies. So only actionable claims. If you are giving actionable claims as security, that we call it as assignment. Then we have something called set off. Set off is actually a right available to the banker to adjust a debit balance against the credit balance in another account. Like for example, a customer has taken a loan from the bank. He's not repaying that loan, but he's having the FD with the same bank. If the bank wants, the bank will have a right to adjust that loan amount against that FD. Then we have lien. Lien, we already know it. Lien is a right of the bank to seize, dispose or liquidate the assets. Whatever assets the banker or whatever assets of the borrower are there, the banker can seize it, they can dispose it, or they can liquidate it for the purpose of recovery mechanism. So these are different modes of creation of security. Either you might find a descriptive question or you might find a MCQ question from here. So tell me, what are the 6 broad categories of modes of creation of security? Mortgage, pledge, hypothecation, assignment, set off, and lien. Mortgage is for immobile property. Pledge and hypothecation are both for mobile assets. Assignment is for actionable claim. Set off is a bank's right to adjust the debit against the credit balance. Lien is right to seize the property or dispose or liquidate the asset. Next one. Now comes the most important part, asset classification. See, in the recent times, they are very frequently asking a question, when an asset will be classified as NPA. When an asset will be classified as NPA. So this we have to understand it. So generally an asset becomes NPA when it ceases to generate income for the bank. This is what a general definition. But if you go by the conditions, when actually a bank will classify a loan or advance as an NPA is when interest or installment or interest and installment, both or any one. So interest and or installment of principal remain overdue. So either interest or installment of principal, they remain overdue for a period of more than 90 days in respect of a term loan. So if the banker has given a term loan, either principal or interest, if it remained overdue for more than 90 days, it will be classified as NPA. However, if it is a overdraft facility or cash credit facility, if the account remains out of order, it will become an NPA. In the case of bills, if the bill remain overdue for a period of more than 90 days, then it will be classified as NPA. Now you all will get a doubt, sir, what do you mean by out of order? You are saying that in case of overdraft or cash credit, if it remains out of order, then we will classify it as NPA. But when a overdraft or cash credit facility will be classified as out of order, from here also they are testing hell a lot of MCQs. Let us see. An account shall be treated as out of order when outstanding balance remain continuously in excess of sanctioned limit or drawing power. So some customer has taken cash credit or overdraft. So his outstanding balance is continuously in excess of drawing power or sanctioned limit. Then his account will be classified as NPA. Or in case where outstanding balance in the principal operating account is less than the sanctioned limit or drawing power. In some cases, what will happen is outstanding balance will be less than drawing power and sanctioned limit only. But there are no credits continuously for 90 days. There are no credits at all. The account is continuously within the drawing power or sanctioned limit, but there are no credits for a continuous period of 90 days, then also it will be classified as NPA. Then also it will be classified as out of order. Now the third case where also overdraft facility or cash credit can be classified as out of order is, say for example, some account is there where outstanding balance is always within the drawing power or sanctioned limit. That is number one. And there are credits also. There are credits also for a continuous period of 90 days. But whatever amount that has been credited, that is not even able to cover the interest also. Then also it will be classified as out of order. Credits are there, but are not enough to cover the interest debited during the period. These accounts should be treated as out of order. So a CC or overdraft facility will be classified as out of order in any of the 3 cases. Number 1, the account is continuously in excess of drawing power or sanctioned limit. Number 2, account is within the limits of the drawing power or sanctioned limit, but there are no credits for a continuous period of 90 days. Number 3, The account is within the drawing power and sanction limit. There are credits also, but the credits are not even able to cover the interest component. In any of these cases, we will classify a CC or OD as a out of order. If it becomes out of order, then it will go to the NPA category. Next. Then you all will get a doubt, sir, when an account will be classified, you are telling overdue. No, when we call an account as overdue, if the due date is over, but if you did not make the payment, then it will become overdue. So any amount due to the bank under any credit facility is overdue if it is not paid on due date which is fixed by the bank. Now comes the most important note to point. This is where many MCQs are getting tested. Assert classification would be borrower wise, not facility wise. Sir, what is the meaning of this? Say for example, there is one customer. He has taken housing loan, he has taken working capital loan, he has taken vehicle loan. See, working capital loan he is paying on time. There is no overdue. It is not classified as out of order also. Vehicle loan he has taken, he is making continuous payments, nothing overdue, no overdue at all. Whereas he has taken housing loan, on the housing loan, he's not paying that interest or installment for a period of more than 90 days. It remained overdue for more than 90 days. So now NPA classification should happen. Should NPA classification be done for only housing loan, or should all accounts be classified as NPA? The answer is, if even in case of one loan, if the customer has made the default, all the accounts will be classified as NPA. All loans will be classified as NPA. That is what the meaning of this term. Assert classification will be borrower wise, not facility wise. We will not check whether against this loan, okay, only for housing loan the amount is overdue for more than 90 days. Let us classify this housing loan facilities as NPA. Let us keep the remaining two under standard category. Not possible. Even if the customer makes a default, even if one facility is getting classified as NPA, that entire borrower's facilities, all the facilities which are in the name of the borrower will be classified as NPA. Very, very important point. Now, there is one more classification, SMA classification. See, generally, when an account remains overdue for more than 90 days, then it will become NPA, right? Sometimes for early identification of NPAs, banks will follow one more classification, which we call it as SMA. So SMA also three categories we have: SMA 0, SMA 1, SMA 2. SMA 1 are those accounts which are overdue only up to 30 days. They are standard only. See, all these SMA 1, SMA 0, SMA 2, all these are under standard category only. They have not yet become NPA. Just these are early warning signals of those accounts which can become NPA. So SMA 1 will be those accounts which are overdue up to 30 days. SMA 1, these are overdue for more than 30 days, that is from 31 to 60 days overdue, it will remain under SMA 1. Whereas if it remains overdue from 61 to 90, then it will become SMA 2. If it becomes overdue for more than 90 days, then it will become NPA. So SMA 0, SMA 1, SMA 2, these are all standard assets only. These are just those accounts which are early warning signals of which can become an NPA. That's all. Next, now comes the provisioning requirements. How much provision you are required to maintain for substandard assets. Generally, what is substandard asset? Substandard asset will be one which has remained in NPA category for a period less than or equal to 12 months. If an account has become NPA up to 12 months, it will remain in the substandard category. And for those assets, you are required to maintain a provision of 15%. On the other hand, if a doubtful asset is there, sir, when an asset will become doubtful? See, up to 12 months, you are remaining in substandard, no? So if the asset has become NPA, if it remained in the substandard category up to 12 months, now after 12 months, it will go to doubtful category. So would be one which has remained in the substandard category for a period of 12 months. So now what is the provision? See, if the doubtful assets are unsecured, so that unsecured portion always should have 100% provision. But however, if the doubtful assets are there, but it is secured, then we need to check how far it is remaining in the doubtful category. So if there is a doubtful asset which is secured, and if it remained in the doubtful category up to 1 year, for secured component 25%. If it remained in the doubtful category for 1 to 3 years, for secured component 40%. If it remained doubtful for more than 3 years, then 100%. See, this 25, 40, 30 only for secured. If it is unsecured, no matter how long it is remaining in the doubtful category, always 100% provision you have to create. Only for the secured part, we have to check that 25, 40, 100 depending on how long it is remaining under doubtful category. Then loss asset. Loss assets are those assets where loss has been identified either by the bank, internal or external auditors, or even the RBI. So depending on their suggestion, they will classify it into loss asset. Once an asset has been classified as loss asset, it will be 100% provision will be created. Now we have some special NPA norms from where MCQs will be tested. Number one is government guaranteed advances. If the advance is guaranteed by central government, then assert classification, it will remain in the standard category only, but will be treated as NPA for income recognition. So when the guarantee has been given by central government, unless that guarantee is revoked it will remain under standard category. For asset classification, we will keep it in the standard only. We will not treat it as NPA. But for income recognition, we will treat it as NPA. That means for income recognition, we recognize income only on cash basis, not on accrual basis. Sir, what if the guarantee is given by state government? If the guarantee is given by state government, no special treatment. Always, if it remains overdue for more than 90 days, we have to classify it as NPA. No special treatment will be available. Now, sometimes there will be an account where there is a erosion. Erosion means reduction in the value of the security. In those cases, either you have to classify it as doubtful or loss. Sir, when doubtful, if the realizable value, here very important point you have to keep in mind. So, if the realizable value is less than 50% of the value previously assessed, previously banker or RBI would have assessed the value. From the previous value, if the realizable value is less than 50%, we have to classify it as doubtful. However, if the realizable value is less than 10% of the outstanding amount, whatever amount is outstanding from the borrower, from that outstanding amount, even if the realizable value of the security has fallen to less than 10%, then directly losses it. Okay. So if the realizable value is less than 50% of the previously assessed value, see here with which you are comparing, that is very important. For doubtful, they are asking you to compare the realizable value with 50% of the value previously assessed by the bank. So if it is, then doubtful. For loss asset, you have to compare the realizable value with outstanding balance. If it is even less than 10% of the outstanding balance, directly it will go to the loss category. Next, advances against term deposits, NSCs and KVPs. So these are highly liquid assets. In case if the loan has been taken for the purpose of against term deposit, NSCs or KVPs, provided adequate margin is available. If adequate margin is available in the account, you can treat it as standard, even though it remains overdue for more than 90 days, you can treat it as standard asset only. So no need to classify it as NPA, but the condition is what? Adequate margin should be available. So you should always have enough of margin. If enough of margin is available, you need not classify them as NPA, even though it remains overdue for more than 90 days. Next, agricultural advances. From here also many questions they ask. So for agricultural advances, we divide agricultural advances into two categories. Agricultural advances given for short duration crops, agricultural advances given for long duration crops. If it is short duration crop, if it remains overdue for 2 crop seasons, you have to classify it as NPA. If it is a long duration crop, if it remains overdue for 1 crop season, you have to classify it as NPA. Then next most important concept, how to calculate the drawing par. This is the format for calculating drawing par. So first you have to take the stocks at realizable value, that figure you have to take. From that, if there is any damaged stock or obsolete stock given in the question, that you have to reduce. From that, you should also reduce something called sundry creditors. Then you get the balance, that we call it as paid stock. In the question, they will mention the margin, that percentage of margin you have to multiply. And if you reduce that figure, that will be the drawing power for stock. Then you have to take the debtors, total debtors you have to take. From that, you have to reduce the ineligible debtors. Generally, those debtors which are overdue for more than 90 days, they will become ineligible. They will mention in the question. So that ineligible debtors, you have to reduce it. Then you get the eligible debtors. In the question, they will mention what is the margin applicable for debtors. That percentage you multiply, you will get a figure. So now whatever figure you get after reducing that margin, that will become the drawing power for debtors. So if you add the drawing power for stock and the drawing power for debtors, you will get the total drawing power. Clear? So these are a few aspects from where MCQs, we have a chance of getting an MCQ. So I don't want you to lose any of the marks, and these are the most ignored concepts in the audit of banks. So that's why I thought of covering these concepts. Please do refer it. Please have a look at this PDF before you go for the examination. So all the very best, my dear students. Utilize the balance time, whatever is available. Take care. See you.